See it, Mike, or not? Yeah.
Yep,
Please.
yep, I
Yep.
see it. Everybody else see it? Okay.
Okay, so let's.
We see it fine.
Okay, let's go back to this basics here. So what is a rocket base? It's a kind of term that's been around for a number of years, but essentially it's a high-type flag pattern that has broken itself in one or two ways. So it's either had a retrace of more than 25%. As you know, a high-type flag. I've got one here in front of us. Let's zoom in. So high-type flag has a move of 100% in 8 weeks or less, or 100% or more in 8 weeks or less, and then a retrace of 25% within the first 10 to 15 days, and then starts to move out. The traditional way of buying a high-type flag, obviously, is to buy it to break out over the previous high, and we tend to like to buy where it comes out of a small range, tight range consolidations, basically. So down here, this one is a rocket base because I've put it on here. So, and what I thought I would do is just kind of go through them and show you how I trade them. Now, it's a couple of these rules I kind of picked up from other people like Life Serene and a few others. And I kind of picked some of their rules up, some of which I kept and some of which I discarded. And the other ones are the ones that that I tend to follow. But like anything, it's kind of basis. Take what you think from it, and you know, add to it, make it your own, or just completely ignore it because it's not for you. So the whole point about these sort of setups, rocket bases, they can be very explosive, but unlike a high type flag, it's either extended itself. A high type flag should resolve itself within 5 to 8 weeks, and often you know, rocket base generally doesn't, because it is essentially coming from either a deeper retracement or a much longer, shallower retracement. And really what we're trying to do is pick up on the signs of strength towards the end of that pattern. So as it's coming towards the end of that basing period, we're looking for those signs of strength, and that's where we're looking to buy it. So a number of key things that I look for. So I always buy, and I think I've mentioned this already to some people, on the after the second retrace, because it's generally a longer base and a high tight flag. If we'll know what a kind of high tight flag sort of looks like, it goes up like this. We get a nice retrace like that, and then we go off it goes. Delete that. A rocket base often goes like this with a slightly deeper retrace, and then it has something like that in it. What we are trying to do is buy on this after the second retrace, and it's showing us that it's kind of going up. So we're looking for much the same things, but somewhere in here. And there are a number of ways we can do that. I like to look for it's broken a downtrend line and then retraced a bit further is kind of one of the ways I use it. So if you look at on here, you know, if we came back to, you know, how we would normally see this on a day-by-day basis, we'd be looking up. We'd say, okay, we're waiting for this to retrace to about 25% for 2 to 3 weeks. We're 1, 2, 3, 4, 5, 1 week in, 2 weeks in, and then it started to go up. So now it's kind of broken this initial downtrend line, but then all of a sudden we get a second retrace coming down, and that's where it actually bottoms out. And this is then where we would start to look at potentially buying. Now there's a third one here, people like Life and whatnot, they would be looking at buying this one sort of here on this breakover, because there's your bar of strength. That would be a traditional entry on a rocket base. Sometimes I'll look to cheat a little bit, the old Mark Minervini kind of low cheat, if you like, and I'll pick it up from that little, look at that nice little tight range there. As it breaks out above that, then we go, and that's just kind of had 1, 2 retraces at that point, and I think that would be, yeah, so that's kind of a 40% retrace. So it's just on the borderline. You can go down as far as 50%, and some people do. I've made my cut off 40, because anything that goes over 40, you'll get 1 or 2 that will creep back out, but it seems to be just a bit too much for a stock to then make another move. I mean, a 40% decline needs a 58% increase or something, a 68% increase, to get back to that high. So that's quite a move if you're picking it up off the bottom here. So, but one of the reasons we do like to buy these is because they potentially make some really big moves. So this was one, Yala. It made a nice big move. Picked up down here, scale out, exit. You have, right, this is another one that we traded. I don't know what's happened to my volume bars down here. Oh, crikey. Anyway, so I'm trying to figure out which one is the rocket here that I moved across. Yeah, this one here. So this has had the big move, retraced just 38%. We'll wait. This is how I would generally do it. So I would have a downtrend line here. I want to see that getting broken and then a further retrace. So it comes back up almost to the top now. This is what would shake a lot of people out. If they were trading this as a traditional flag, they would be buying it here, and then it immediately drops back because it's not done selling off. And that's 28% move in 2 days. So if you'd bought in here, you'd definitely be out of here. No two doubts about it. So let these things do their thing. If it goes off, then you've missed it, and there's plenty more fish in the sea. But it's come back for its second retrace, then it tightens up, and this is the tightening up here, ATR declining here. That's what we're looking for, these signs of strength, and then off we go. So we get in on this day here, and we get a scale out same day, another one 2 days later, another one a few days after that, and then exit. So, and that nearly doubled in 5 days. 1, 2, 3, 4 days actually. So that's the kind of explosive moves you get out of these guys. 82% in 4 days. It's another one, OVV. So it's a rocket base. So this is a long base. This one. So this is broken itself in 2 ways here. It's retraced more than 25% because that is 27.11. But if I look at date-wise as well, it's also 56 bars, which is 10 weeks. Remember I said at the start, it can be 6 to 10 weeks that they take to kind of resolve themselves, as opposed to the high tight flag, which is essentially normally 3 to 5 weeks. So it's pretty much double what a high tight flag would take. So a big long base. Take that out of there. But again, you'll see very similarly. Essentially, we stick ourselves a downtrend line in there, so we know this is now a high tight flag because it's at this point here we may be looking for an entry, but it keeps going down, turns into a rocket, breaks this, so we look for a high and a decline, which we get, and we get a further one actually, and we're just looking for an entry point. We're looking for where we see some strength coming in, and that's kind of the key to this. But again, there's a nice little tight range there. Picking it up, averages are all tightened up, and then we get a couple of scale outs. I didn't think this one went particularly high, and then out here somewhere. Must have a wee arrow hidden behind that. But yeah, again, you can see your the volume coming in at this point. We've got all the usual stuff we expect to see: volume decline, range decline. That's all coming down all the way into here. So that's slightly different from the others, and it's not a big deep retrace. It's a very long one, but it's why you've got to keep these on your watch list for what seems like half a year sometimes, because you're normally watching them from about here all the way through to here.
So, Stu, when you say you were waiting for some, for the volume to come in, what are you doing on that day? Because you're seeing volume. Do you have the day before set up that you think maybe tomorrow might be the day, or what are you looking for on that day? Do you go down like to minutes looking at stuff, or what?
Yeah, I look at the opening range, volume, and that's what this little indicator here tells you as well. So as you watch it during the day, it'll go blue at certain points if there's more volume coming in that day than there has, on average. So it takes 15 minutes for it to kind of build up, but you can look at it, the RVOL there. The other place that's great to see it is on FinViz, which I'll just take a note of that. I'll show you the RVOL on FinViz. And normally if you have a look at that after the first 10 minutes or so, FinViz RVOL updates every 3 minutes on the free account. But you can see what you've got there, and if you have them on a little watch list, if any that you're looking, you can see if they're attracting the volume. I'll just put a note of that. But sometimes it's a bit of a feel thing as well, Tish, to be honest, because volume's not the only thing. But you'll often see that big spike of volume from the kind of get go, and sometimes you'll see it pre-market and stuff like that as well. But in this case, price opened well within the previous candle, so it would have kind of crept up to it, so you would have seen it building, in the first 10-15 minutes of the session.
Okay, thanks.
So I hope this is of use. Now let me see, ORMP, where did we do? This was a rocket down here. I've not mapped on that. I'm not sure. I think I actually traded this. I think I was just watching this and never traded it, or I had some marks on it. But again, it's similar that you can see, the long kind of retrace down to here. Ideally, you wait to see another retrace, which would be actually about here somewhere, and then you could kind of pick it up. But if you're waiting on that second one now, there's often cases that you could potentially have made a trade somewhere in around here and made 40% on it, but you've got these big scary bars here. So normally you're kind of waiting on the second one, and I think I'd have been waiting for something to set up around here, and it just never did. So yeah, so it's not a great example, but it's one that works. And to be fair with these ones, I would say the ones that work, if you're watching 10 of them, you maybe get 4 of them that take off, that actually give you an entry, and out of the ones that give you the entry, you can normally, if you get an entry on one of these, you'll normally make some profit, because you'd expect to get scale out within the first day and moving stop straight to break even. So, but sometimes it can be frustrating, because you can be watching these things for about 10 weeks, and then you get your opportunity, and then hey, it doesn't, it never triggers. So,
And Stu, on your list, do you just take your high tide flag list and like drag it over to the market list, the rocket list?
yeah,
Okay.
essentially, yeah. You know, in trading view, if you've got lists there, you just click and add it down here, and you stick it on whatever, and it puts it on more than one list. Yeah. So you don't need to physically do too much with them, but well, that's how I do it anyway. If I want to add it to something, I'll just stick it in there, and that's added on that list as well. STKS, I've kind of mapped this one in. You can see this is another one that didn't really work out that well. Certainly for me, I mean, I think overall it's kind of worked, but we get that first dip down, then we get waiting for the second retrace, which is there, and that's when we start looking. And obviously, let me take that thing off there. You can see from here exactly what I was looking at. Looking at a really nice little tight area there. Buy it as it comes out of there. Get a scale out on the first day, and then the very next day it hits my break-even point and takes me back out. Which is what I mean. That these things can be frustrating at times, but that's where it is. And I think this one I'm going to go on somewhere about 50% probably. Move. Oh no, not even that. 30. And I also tried it again here and got stopped out. So not the greatest of ones, but it just shows you that they don't all work. BNTX. Yeah, this is one typically. I think this was quite a deep one. Yeah, so 30%. So really, just kind of wait until I see some form of tightening up. This is probably you guys would see this as a VCP probably. There, and here, and buying it just here. Again, a couple of scale outs and then a break even, so it didn't work that well, that one. But anyhow, Stitch Fix. When did we trade this? Oh, way down here. All right, here's one that two that kind of in a row. One that worked and one that didn't. I think this is just a regular high type flag. Yeah, that's a regular high type flag that I traded up to here. And this is kind of where some of these rules come in, and I break them as well sometimes. And this is why some of the rules I've got in, if I actually followed them, you keep yourself out of trouble. So we can see here that this is at this point here we have got a rocket base because it's 33%. So I should be waiting for my second retrace to have finished, which I didn't. I decided to try it early, and I bought here above this little pivot point, and then got stopped out the very next day. So if I had waited, you would have seen that we actually didn't get break of our second retrace until way along here, until middle of Feb. That was start of Feb, and this is the end of February. And we never actually get a buy point, really. This would have been the first one you'd have probably put a buy entry at 82.20 or something, but I never got there, and then it just fell off. So you can learn from my mistakes here. Don't be too keen to get in without getting the confirmation that we're done with the selling, really. So yeah, I mean that's another little 5% loss, that just another stop out that we shouldn't have had. So kind of warts and all stuff here. Again, here's another one that probably didn't follow the rules most of the time. This is the proper buy point up here. This is the second one that comes down. I got lucky here. I bought on this point. I'd been in this trade before, so I'd already made, I think, 100+% or something on this one. And it's obviously setting up again, so I just jumped in, all gung ho, got a first scale out the very next day. Yeah, great, stops at break even. Yeah, get second scale out, and then eventually gets taken out somewhere along here. But this is the actual real buy here, because that's the first retrace. This is the second retrace. This is the one that's got the power. And I don't know what's happened to my volume bars down here, but you can see the power then. That bar starts coming through, so you get two scale outs on the same bar. So bang, bang. And then, 2 days later, we're out again. And then we try it again, and then out for break even on that one, and then try it again, and then get stopped out. So this was Blink. So I think overall there's 1, 2, 3, 4, 5 or 6 trades there in the space of 8 weeks. But overall making a bit of money, but very frustrating when you try to trade these because you're not getting stuff going for any length of time. SPR. Oh, this is another of the extended long bases. It's always within its 25% retrace range. But it comes down. It doesn't really offer any great buy points here. You could have had some second retrace there, and then we start to see things really tightening up. And this is the bits that we all love to see. Volume coming down like that, and a range falling away as well. So volatility is decreasing, volume is decreasing, coming into earnings, and then we get a nice big pop straight there, and then we get a reasonably good trade on that one. Again, it's, I don't know what you would have got on that. Not massive, 30% move, but a 10-20% scale out, and then a stop, so 20%. But given you would be on about a 3 or 4% thing, that's about a 4 or 5 hour trade. Yeah, 4 hour. Neo. Okay, let's see this one. Yeah, again, this is one that I didn't trade at the right time, and ended up losing money on. So I think we traded this way back in 2020, and got doubles and triples and all sorts of stuff on that. So it was like one of those sweetheart stocks. Sets up this rocket base here. Again, you can see what we got, 32% decline. So can't treat it as a high type flag, and you treat it as a rocket. So here we are coming out of our first kind of retrace. Potentially you could have bought in here, but you just have to suffer your second retrace. Second retrace comes in, bounces off the 50. That's where we start to look, and that's probably as it breaks over that high. That's a really sweet buy point there, and that would have kept you safe. That buy point to go up there. I obviously missed that one. Was waiting on a bit of a second mousey type setup. Didn't really get it. Bought at the high of the day, sold it, and stopped out the same day. So, kind of poor show on that one. But hey, again, it's another one of those unnecessary losses. That wasn't really a buy point there at all. Buy point was back here, not here. Laser. Right, okay. Yeah, this was the only one I could find that I've kept for whatever reason, obviously because of a couple of failed trades. But this one did go over 50%, so 52% decline. But it's just too much for this stock, and pretty much all the ones I've seen that have dropped, more than 40%. So, even sort of low 40% issues. They just it's now you're now asking too much for that stock to come back up. It just can't pull itself out of this space. It's going to take a long time to do so. So I think we thought, there's a retrace there, then another one here. Gave it a shot, stopped out the same day. I've also got a stop out there, so I must have tried it again, stopped again. So, 2 losses, space of 4 days on the same stock, and then you see what happens. It just can't pull itself up. Let's look at this guy here. Here's a rocket base. This is another one that got wrong. Should have waited. Take these off. So traded it back here and got some money. Traded it there, got some money. So again, it's another one of those kind of sweetheart stocks. You think, here we go, I'm going to make more. At least this time, I did wait for it to peak. It came up, hit. That's his first retrace. I don't know how deep that was. 35, yeah, 34%. Jumped the gun a bit the next day by buying on this day here. I really should have kind of waited a little bit, but jumped the gun, stopped out. I just had a split stop in there. I must have taken half off at the end of that day, and then the original stop there out. So not quite a full 1 hour loss, but kind of 3/4 of an hour loss on that one. Yeah, this was the actual buy point here that I've kind of marked in there. Which, if you traded it right, you might have got a scale out and a break even, so you maybe would have been okay with that. But if I look at that, yeah, you'd have got a 10% scale out and break even, so you'd have been okay there. But again, it's just the importance of waiting for the right time to trade them, because these things can go either way. But this one did look pretty good. We had the volume decline, and we had the range. You can see here declining as well, right into that buy point. Yeah, there's another one. This is another from my archive of how did I get this one so badly wrong. I often say we need to wait at least into week 3 before you consider a buying point. And this is a very good example of it. Again, it comes off the back of a successful trade. You see a pattern here, you guys. Whenever I get a successful trade, I get a bit loose and leery with my entries. But yeah, a successful trade there. You see it coming in, it's 5 days, it's only a week. And I think, yeah, I'm going to buy it here because off we go again, and then get stopped out. And guess what? It never ever got back up. So, patience. Should have waited. My 2 weeks minimum would have been here. At that point, then we would have been looking at probably a rocket base. Yes, we would. So we'd have been waiting a bit longer, but jumping the gun. And finally, apps. Right. I've bought this tons of times. Oh yeah, here we go. I know we're going back to. I mean, this is another kind of sweetheart stock, but it was high type flag. Here's a rocket. I think it's quite a good one actually. Yeah, a couple of. So there's a kind of high type flag set up there. You will see it. It comes up to there. Dead straightforward. Boom, buy. And in fact, there was one there as well. So this is about the third setup. one following each other. But this one, you can see this time we do actually wait properly. So it comes down, comes back up, doesn't quite take out our down trend line, falls again. So this is the second kind of retracement that it's having. Comes back up, then we start having a look for an entry. We get a nice little resting bar here, that kind of inside day, from there, but with the highs the closes much, and the high. So we buy it as it breaks above that trend line on this day here. We get the volume increase. We've got a decrease there, and that's the right time to buy it, and that's kind of how they should react. So you get 10%, 20%, and then just let it go all the way up to 105%, and eventually we get stopped out down there. And then it sets up yet another rocket base at this point. So learning the lessons of the past, this is a 40%, so this is marginal for me, super marginal. But it never closes below that 40% line, so I think it's just slightly over, so we'll let it go, see what happens. But we wait, we get a second retracement. Now we're starting to have a look at where we could potentially enter. And I don't think I find a decent entry until way over here, which is quite a long way from when we started watching this guy. Yeah, 742 bars, which is what, 8 weeks, 8.5 weeks. So, and then we get 10, 20, and then a bit of a stop out there. So that's all I've had a chance to go through. I do have more, but I've got about halfway through my 21 trades to find those one. Did that make sense? Was I explaining that okay, or is that, do I need to write it out as a presentation?
No, that was good.
Okay. So yeah, but certainly, essentially when it goes over that 25%, you've got to wait for the second dip, and then only when it starts coming out of the second dip, then you look for some setups. That's how I trade them. Try and keep myself out of trouble. But as you can see, I get myself in all sorts of trouble a lot of the time anyway. I was going to show you FinViz. FinViz.
It's a similar thing to VCP, only it's kind of like 2 pullbacks and then a rocket.
Essentially, yeah, it is. It's there's not enough power in the first one to get all the way out of the base, so you're waiting on it to set up again, and then hopefully the second push should have enough power to rocket it out of the base. That's kind of how I think on it. So I'm going to this screener. Let me log in here. If I go to my screens, so within FinViz, you can create a little watch list. So you basically put your tickers all together. You can add them in to whatever they are, and then you can sort order on your screener by relative volume. So you want to sort it by relative volume descending. And that then sorts these all out, and you'll see if you keep this up during the day, every 3 minutes they all move around. But this is the one that's got the most relative volume. And if you want to see what that R volt is, it's down here, 1.59. So 1.0 is exactly average. If it's less than 1, it's lower than average. If it's more than 1, it's like percentage. So like that 1 point is 159% volume came in on that stock. and that for update, as I say, updates every 3 minutes on the free version. If it's the live version, it's like every 5 seconds or something like that if you pay the paid for version. But that's essentially what you do. Is you create yourself a watch list and sort it by relative volume, and then you just tweak your tickers up here. I could share that screener for people, and you just put your own tickers in it if you want. Could be this.
Okay, and when you're looking at the relative volume, what are you looking for when you're, is there a certain like 1 or above or
Yes.
1.5
Yeah.
or?
Yeah. Essentially, yeah. You can look at it via you go this way. We can add. So this is it. This is my ticker list here. But you can. Where's this? Somewhere I add this. The custom. No. Somewhere I can add that RVol into this. Actually, maybe it is custom. Oh, here it is here. So I've set it up like that. But yeah, so that when you set up a custom list in FinViz, you can add any of these things. But you've got relative volume here, and that's in descending order. So that's 159% of average volume on NCR 35. These ones here have got less than average volume. Like Heckler Mining's only got less than half of its normal volume traded. Yeah. So plus it gives you the actual volume plus all that sort of stuff. But yeah, that's let me just put that in the meeting room chat for you. If somebody wants to try and click it, you should in theory see that first chat when we're on. And then all you need to do really is go and change those tickers to whatever you want. I think that's it from me, Mike.
Thank you, Stu.
Give you a new tool to play with,
I have a few questions, if you don't mind.
Sure. Yeah.
First off, that was a very good presentation. I thoroughly enjoyed it, and I think everybody here would agree, and so would everybody that's watching the recording. This is going to be a great one for the archives and to go back and rewatch. So thank you.
You're welcome.
All right.
I
So
want to thank you too. That was really great. Thank you.
Oh, thank you, Tish. Thank you.
One thing that I want to make sure that I got this right. How long is the basing part? Right, like so you have the 100% move, and then you have the maximum 40% retracement. Well, what's the longest that you would allow it to move sideways for?
Well,
like, is there a maximum?
I don't know that there's actually a maximum, but I would lose interest after about 10 weeks. Remember, a high titan flag is sort of 3 to 5 weeks. So it's just kind of doubled really to 6 to 10 weeks is where we expect that to come in. And that just seems to play out in reality. It does seem to take, maybe not ever as early as 6 weeks, but yeah, or as late as 10 weeks, but it's in that ballpark, if you like, Mike.
Okay.
I mean, this one is quite a long one. There's a buy point in there really, and that's probably 6 or 7 weeks. Rather than that one, which is just ridiculously long. 41 bars, 58 days, 61 days elapsed. So that's well, it's nearly 10 weeks, isn't it? Roughly. 7 days a week. So yeah, okay.
All right, great.
But I'd say, yeah, I think people have to develop their own rules for trade needs, and hopefully the ones that I've laid out for you keep you mostly out of trouble.
No, for sure. And yeah, like how you mentioned earlier that I don't think it might have been this one, but there was one that you had mentioned. Oh, kind of looked like the VCP at one point, and I think that this one kind of fits the bill of that very well, where around like the mid-October, you had that first drop off, and then it gets progressively tighter, pops above the prior high, tightens up even more, and then goes.
Yeah. They all do. You are essentially often buying the second squeeze on a VCP, if you know what I mean. You know, that's another way to kind of look at it, I suppose. But ideally, what you get is these. If I know this is very small. But ideally, you get these little bits, these little tight ranges. You know,
In
these
this
are
example, you have a VCP and then you have your rocket,
yeah.
right?
Yeah, essentially. Yeah. Often what we're trying to do is, I guess, we're often buying within the base rather than as it's coming out of the base, you know. And it's I mean that's a big move for any stock there. That one that's 70% move, and it's just getting out of the base. That's a big move for any and that's why these rockets are, when they do get out, then they can really go, because they have got a lot of strength, but we've been with a 40% retracement, they just don't have enough, given the way that the percentages work the other way around. So 25% loss is a 33% gain, all that sort of stuff. Yeah. But certainly there's you'll find them all about, and it's if you're tracking and watching high tide flags, if it breaks the high tide flag rule, then just watch it for another 5 weeks. You've been watching it for 6 or 7 weeks already anyway, so another month or so is not going to hurt. You may get an entry.
Yeah, that kind of brings up another question that I had about how you manage the list. So you tell us about your process for managing these lists. Like you find it through your screening, you gain interest in it, and then you put it somewhere. Like how do you continue to keep track of these, so that way they don't fall off the radar? Is it a special list that you're keeping separate from others? Is it I'm kind of curious about your list management. Kind of a segue, but yeah.
I use stock charts, so that's kind of where I do all that stuff in. And I have them down here, so I'm on a chart list. But my key ones here, I've got these 4. Got the Minervini trend list, my gainers list, my rockets list, and my high tech flag list. So what I do on a weekly basis is, I'll just go through that. So I go through my scans. What are my scans? I'll pick a scan. I'll scan for high tech flags. I'll run that. Right, that gives me 24 results this week. So what I do is I take that and I merge those with my existing list, which basically just adds any new ones in. If it's already there, it doesn't add it. If there's something here, I'll just save that in. That adds it into my list. And then what I do with my list is I'll just go through and prune out anything that I no longer want to see. And then there's sometimes, for weeks and weeks, I'll add the same old junk stocks in that you don't particularly want. But, and I just run through them on this little candle glance chart. And anything that I don't particularly like that one's already gone, stuff. But keep that because that may come back in. I just flip through them. Anything that I don't want is gone. This one here, and you can dip in and have a look to see where we are in terms of some of these things. But I'll often just kind of annotate them up and just kind of have a look at where that is gone. Yeah, so that's a rocket already there, that one. So, and that's pretty much how I do it. And then when I'm actually looking for stocks that are getting ready to set up, what I do is every week, once I've refreshed all four of my lists, my key lists anyway. So I do these four here, and then take each of those and add them into this master list that we have here, which is got 134 stocks, and then I can run my daily scans against this weekly master list. But I also keep my high tight flags, my pullbacks, as they're on my kind of homepage here, so I can see what's happening. So you can see that one's on my list that moved 43.5% on Friday. Wow. So that was obviously setting up, and we missed it, but hey, nearly doubled it. Oh, yeah, that's pretty good. So yeah, that's just kind of that's just keeps my list. So, and ideally, any of these ones that are popping off will have an order in for them.
All right,
Does that answer the question, Mike?
Yeah, that answers it very well. Thank you. You give me a few ideas of how I might want to adapt some of that for my own list management too.
Yeah. High tight flags are funny because you scans tend to pick them up, or well, certainly my scans pick them up as they're making that kind of high. Now they may go on to make further highs or whatever, but so that's why often they'll be on your list or on my list anyway for 4 or 5 months at a time. From when they first appear to when they finally get taken off. So because they can take so long to kind of set up, and then once they're on, they can set up over and over again as well. So they tend to be those kind of stocks. So yeah, sometimes you feel that you're looking at the same old names constantly, but there's not that many on there just now. It's how many high tech flags have we watched? Potentially 40. So not very many. Rockets only 8. So yeah, it doesn't take long to flip through them on a weekly basis.
No,
And any that start to look so they might set up within the next few days, then I'll move them over to TradingView. Keep an eye on them.
In the beginning of the presentation, you had mentioned that there were rules that you learned from other people that you kept and rules that you learned from other people and you disregarded. I'm kind of curious to hear about some of the rules, if you remember them, that you disregarded. And if you remember them, well, why you disregarded them?
I'm trying to think. There was a lot of rules about buying near the highs here that I disregarded because I don't like buying that far away from a 21 period moving average, essentially. So in many cases, this particular bar, this one right here, that would have been a buy for people, and it's it's not one that I'm interested in. Same as this would have probably been a buy, and maybe one of these as well. So when I kind of looked at them, I just kind of, because I'd already been trading a few anyway. It's people bring in a rule, and if you go, but you don't just adopt somebody's rules for the sake of, because someone told you, here's a great rule, follow it. You want to test it and look at it and prod it and poke it and make sure it's going to fit for you. So I have a kind of a couple of watch lists, within here, so I can kind of go and pick in a lot of different watch lists, and I just go through them, chart by chart, and say, this rule, would that have helped or hindered, and just kind of go through it like that. And if I see if something's generally helpful, then I'll look a bit further at it. If it's 50-50, I'm not going to bother. And if I see that, that would have kept me away from 80% of the mistakes that I made, or got me in earlier on all the successful trades that I had, then I'll start to have a good old look at that rule. So I would need to go back over my notes, Mike. I do have notes on that stuff, so I can go back through and have a little look, because I kind of keep all that stuff in an archive. But yeah.
Oh, that's some very interesting insights there. I totally agree with you in that. We take what works for us and leave the rest behind, and keeping track of it too is whether it's in a journal or something a bit more formal is a good idea as well. And it's good to see too, like the rationale, like while you're buying close to the high and you're far away from support, and that actually leads into another question that I had. I had like a whole list of them here too. So one of the things that I was curious about too is now when it comes to setting stops, how tight are the stops that you're typically setting on these? And to me anyway, one of the things that I find that I run into as a problem is, if I'm using a daily chart and I'm trying to find the entry point, everything might look fantastic. Like it might seem like there's a lot of momentum. The setup checks all the boxes, but then when I take the measurement between the entry point and where I want to try to set the stop, it ends up being a bit too wide. And so I'm kind of curious on your take about stop placements and how tight they are, and any other tips you might have.
Well, for both high tight flags and rockets, I set my stops in the same way, which is my preferred spot to place them is under the previous day's low. If they can get in there, then and that's within 5% of my buy price, then that's where we'll put it. If that's not possible, then if we already have an opening range in for the day, so we've got at least half an hour's of trading under our belt, then I will stick my stop under today's low, if you like, if we're placing an order today. If that opening range isn't in, if something's happening in the first 10 minutes or something and we're approaching our buy point or stock's just galloping up, I will just put a technical stop in of 5%. And as soon as we get a low of the day, I'll move it to that. And that's kind of how I manage it. But I guess there's no rights or wrongs to that, really. But as soon as we've got that opening range low, and then I'll generally stick it at that. And if you go back and look at all the charts, the best place, if you look, if I just flip through all my charts where my buys are, the best place for me to put my stop is always under the previous day's low. If we can get, because if it breaks that previous day's low, I'm out of my position anyway. And if I whoever one I pick, find that the previous day's low is where the best place for my stop, if that's possible. Because in theory, it should never revisit that anyway. It should never really revisit your buy point because you're hoping within a day or two that you're scaling out and you're at break even anyway. So that's how I work.
Do you find that with the high type flags and the rocket bases that the setups tend to go faster if they're going to be winners versus other types of patterns that maybe they break out and then they squat for a few days?
You get that sometimes, but that's just because you're buying early. You're not bought at the right point, and that's what you have to learn. That's the art of trading, isn't it? Is buying at the right point. You've got to get your buy point right. I know a lot of people say that you can buy anywhere at any price, and it's trade management that makes all the difference. But if you buy it right, then you can have sloppy trade management and still make money. But if you buy it wrong, doesn't matter how good you trade management, and sometimes you're just going to lose money. So, 6 of one and half a dozen of the other. But I think it's worth just being consistent. If you know yourself that that stop's good, if the trade's going to work, and if you get stopped out, then you bought it too early or it wasn't a great buy. Either way, it's on you, and you got to look at that and go, why did I buy that at that point? Or what triggered me to make that call? And you just got to improve on that. You're not going to get them all right. And if you think, well, it was a good buy, it was a good call, just didn't go my way, then that's it. Then I'll show you lots of mistakes that I've made. So, I'm not immune from making stupid mistakes, being overconfident, and all that other stuff that you do. It's constant battle, but you just got to keep yourself honest with it.
I only have a couple of more questions here. The turning into a big interview here. You'd mentioned scaling out, when it breaks out, like often it'll hit the first scale out. Can you just review how you go about scaling out, 5%, 10%? Is it different than on rocket bases and high type flags than how you would scale out of a pullback buy or something else?
No, it's not. It's exactly the same. But I base it based around similar to you, but market condition. So if I think the market's in green mode, then my first scale, I scale out a quarter of my position at 10%, a quarter of my remaining position at 20%, and then run the rest on a 10 EMA trailing stop. If the market's kind of amber, it's somewhere between 7.5% and 10% my first scale out, 15 to 20% second, and then trail the stop on the 10 EMA. And then if the market's in a red condition, it's 5 and 10%. Again, with a trailing 10 EMA backstop. So that's kind of how that works, and that's just sort of three sets of trade management rules for different market conditions, but they're not different for setups.
Quite interesting. That makes to me that makes a lot of sense. Let's see.
But the thing is, high tide flags and rocket bases only appear in stage 2 uptrending markets. They don't appear at any other time. So, you shouldn't really be seeing many of them in red, except at the end of a run, if you know what I mean. But most of them should be when your markets are amber and green, because they've got to have run up 100% before the pattern even starts. Yeah.
Do you think that's part of the? Do you think that's part of the reason why you start to see several popping up in a row? I think you had mentioned that earlier too.
And that's more often than not related to certain sectors or industry groups. Yeah. And I think there is a kind of general market wisdom that the sector or industry group accounts for about half of 50% of a stock's move. So yeah, they do kind of move up in lockstep. But yeah, you'll find that all the time. That whatever. So, I mean, that's why there's a lot of energy ones currently on the high tech flag list.
Hey Stu, would it be possible just to like throw a couple of like the rules that you follow for Rocket in the chat?
Yeah, that's what I was saying. Yeah, if I need to abstract it out a bit more so that it's like, here's what I do. Put a little kind of. I did have a checklist. I might still have it, to be fair. When I start trading a pattern or a setup, I write a checklist out to make sure that, just to make sure that I'm being consistent and trading the right thing and trading everything exactly the same.
Yeah, I wrote down as much as I could, but you talk fast.
Oh, right, okay. I'll slow it down.
I just want to make sure I got them all.
Okay, yeah.
Thank you, I appreciate it.
I'll put something together to show the next week or so, if that's okay.
Yeah, that's perfect.
Yeah, it's a good thing we record all these, and put the speed on the recording too. I know you could speed it up. I'm pretty sure you might be able to slow down the speed of a video too.
I should be more aware of that.
Well, you can also stop it, which is nice.
Yeah.
Well, one final question for me, or that last part when you mentioned that you started to notice a pattern of jumping the gun a little bit after a few wins. I'm curious if you thought about well, what's the common factor there? Like, yes, it's after a few wins under your belt, and seeing it, but what have you dug into, or when you start to think about, well, why might that be? What comes to mind?
I mean, I think I kind of know why. Often because individually, that particular instrument or name might have had 3 winners on it, one after the other. Made some good returns. But not just that one. You tend to do, if you look at my equity curve, there's a whole bunch of them all coming out at the same time, and it's often that kind of hurry to recycle that money, because when those good times come around and everything just hits and works, and you're getting 25-30% returns every month, you want to keep that going as quickly as possible. And it's just that recycling part, I think, is kind of when it comes in, because they all happen round about the same time, and you're coming out of a stock, you've just got a whole pile more money, you're just trying to recycle it back in as quickly as you can, because as we all know, I mean, those periods only last 16 weeks, something like that, and then it's back to the grind, so and I think that's kind of why.
Okay. So being far more aggressive during those periods where maybe it leads to a mistake here or there, but if that environment continues, the mistake gets erased, and if the trend does change, or if the environment does change, you start to become more aware of it because things stop working.
And that's where some of the other rules that I follow come in. So if if I get 3 of those in a row, like bang, 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 three full size stop outs, then I'm sizing down until I can get 3 in a row that get traction. So so I've got rules in there to save myself from myself. And that, but it is, and other times you just get sloppy, Mike, and I'm no exception to that. When everything's working and all your setups are there, you just assume the next one's just going to work as well. And I know as well as anybody that chances of it working are the same 42 or 45% that every other one's got of working. But it's just that recency bias, I think you might call it, something like that.
Yeah, indeed. That's a good point. All right, that's all the questions for me. Anybody else?
If anybody thinks of anything, just post it up in the chat. I'll do my best to answer it.
Well, that was fantastic. Thanks so much, Stu.
You're very welcome. Go and get a